candle, and the whole next candle is going to be offering at that price, right? So I'm going to offer that price, and I'm going to bid this price, right? So you're going to do the measure. So they're the two XX levels against that last candle. But that's only valid for 60 seconds. So obviously that never traded in the next 60 seconds. So this is still an inside market. So you could probably still get away with the same information, couldn't you? Probably get away with the same information. And obviously you've got that same information just coming across your charts now. And obviously as it develops, it can be updated as new information comes to light in terms of real value. Because obviously, you know, we've talked about putting in that offer there. Now, obviously, if we're bearish, that offer's probably going to drop down. Why? Because we've also had an offer at that price in the background, haven't we? We've actually got a real offer there, not a possible offer. We've actually seen a real offer at that price already. So we've got that BX level in the background already selling that price level. We've got our market offers at the top edge here, which we're starting to see some confluence about this price. Remember, that was based on this blue candle, then this blue candle. And surprisingly enough, if we draw it against this blue candle, it's not a million miles away from those prices as well. And so we draw against those blue candles, you can see that that's an offer as well at that same point. So again, it's just about starting somewhere. It's a starting point. It's not a finishing point. But a lot of people, when they come to do this type of analysis, they don't know where to start. How do I get to price a market? And the simple way is to just simply price the last candle, regardless of what the time frame of analysis is, or if that's too fast for you, price the last bigger time frame. So say a 15-minute candle or a 5-minute candle, price the last 5-minute candle, and you can start looking inside those areas to start with. So obviously, if we're going to price up this big area here, you can obviously see this BX line here, this BX line here. You can also recognize, therefore, that there's a big offer at that price there. And you can also recognize there's a big bid down into the bottom edges here as well, isn't there? So you already can price up that single candle by simply starting somewhere. And that's your extremes. Remember, that's your extremes. These are prices that will always be profit-taking areas. So that's why we put them on the charts. There's always going to be a seller at this price here. There's always going to be a buyer at this price here, because these are guaranteed discounts, regardless of what happens to value, correct? That's why we use the x-axis in these areas, not the nx levels. So if I was to ask you about this area here, you'd say, well, I'm going to price up this accordingly. I'm going to put my xx level here, and I'm going to put my xx level there, because they are going to be bids and offers 100% of the time. Whether they're bids and offers enough to turn the price, nobody knows at this stage, because we haven't seen them trading. So what we have to then do is make sure we know where those guaranteed sells are, guaranteed buys are, and that's our extreme price level. Sometimes, perhaps, a reversal trade. Sometimes not just a measure, but an actual physical reversal trade. If the value is telling us to be bullish into those areas, then of course this is a great way to find that trade narrative, isn't it? So when we come into this area here, for example, on a 5-minute chart, is there anybody that doesn't think that that's a big buy trade on the S&P? Do you see how powerful that little piece of information was? Is that not the best buy trade you've seen all day? Is that not an incredible buy trade? That is a definite XX buy trade right there. So if you wait for these types of opportunities, if you wait for these types of opportunities on a candle by candle basis, you can start to recognize them, can't you? Because you're obviously on the right context in terms of your time frame. And obviously you can see that from this BX level here against this one candle here, you could obviously have done your calculations, couldn't you? Because you could have done that one. Why would you have done that one? Because the value line's going back up again. So I know that the BX line is going to be under pressure, so I'm going to look at where the XX is, worst case scenario, against that candle there, right? And based on that information, based on that 5-minute information, I have an XX opportunity to buy this area here, agreed? Now, obviously, we don't know what was happening at that point because the candle closed bullish, but you're assuming that the value that was building in the background was still building on that candle. And inside a 5-minute candle, of course, there's buyers and sellers constantly happening, pushing the price up and down. So you can recognize that by simply doing a measure against a single candle, you can still do these types of trades. And another massive opportunity. Obviously, there was a brand new bottom line BX line here, but at that stage, I'm not bidding the BX line because of the short-term value at that stage was driving down. So whether this was a BX line or not, it doesn't make any difference. I'm not buying it. So I'm not going to buy the BX line, but the XX line will always have buy orders. Obviously, you've got another XX line because when that price bids back up again, this red candle bids back up again, of course, that sets up a new XX at the very, very, very big discounted price down here. And that would be something you'd be looking at, but obviously every single candle has the same quality. If you're looking at it on a time frame analysis, in other words, where is your XX offer? Where is your outside offer just now? Dead easy to do, isn't it? Dead easy to do. The outside offer, there's the last candle, there's the low price of that last candle there. So based on that, at the moment, the XX candle is resting here. Can be updated in real time, of course, because a new candle can form and we change our mind. But at the moment, that's where the XX candle is, agreed? As I said, it can be updated in real time. We can give ourselves a little bit more space. We can see some overlapping space. We can start looking at some of these areas. We can obviously try and price up the fact that there's no way you're going to be selling this at this point. So obviously, when you're looking at that red candle, and if I said to you guys, where would you be pricing this? You'd say, well, there's the BX line because the value is bullish, yeah? So you're going to be wanting to know where the BX line is for sure, right? So that was your BX line right there because the value is bullish. The net value is bullish. So the BX line is your starting point for possible bids. Not your best price for bids, but your possible starting point for bids, agreed? BX line's always your starting point for buys or sells. So obviously based on that, you're starting to look at the possibility that there might even have been a buy opportunity on that tester right there off the BX line. Maybe, maybe not. Depends upon your view of short-term value. Short-term value. So you can see we're coming into those offers, and you can see the price is starting to jam a little bit into those offers. So that's not a surprise because you already had an idea that there were some offers resting in those price areas. And that's exactly what's jammed the price, is those offers resting in those price areas. So you can see just how good just keeping the chart up to date gives you some great trade ideas, some great trade levels, and some basic understanding of where you're going to start looking for possible bids and offers. Now, obviously, the BX line is usually not your first. Is usually not going to be a trade unless the value is really bullish. We know that. But obviously, it gives you the starting point for an NX line. It gives you the starting point for an absolute definite XX line. And that's where you start working into those trade areas. You start looking at this area here, for example, and you say to yourself, well, I've got a strong bid here and I've got a good offer here. I can absolutely guarantee that based on this, if I was presented with a bizarre price down here, I would absolutely guarantee that there's going to be a buyer at that point. Because every single seller that's in this will be throwing away their trades. Obviously, the NX price, based on the value, could well be a decent buy as well at this point, couldn't it? It's definitely got a bullish slant to the narrative here. And you're now finished. You're now ready to launch some bids into prices. What happened? Well, the price traded to that NX price almost perfectly. The value was still bullish. There's no way you're going to get the XX price. And that became your buy opportunity right there. And that's where the first original buy came from. You see how nice that is? You see how beautiful that little trade is? So we can start to spot these ideas, can't we? We can simply start recognizing it by just being a little bit proactive, because inside a 5-minute chart, there's 5 ones, and inside a 1-minute chart, there's 60, and there's 60 seconds, and inside of that chart, there's, you know, all the hundredths of a second. But obviously, you've still got to have something you can measure. So you don't want to get ridiculous with this idea, guys. It's best to go from the big picture down. So from the half hours or the 15 minutes down into the 5 minutes, down into the 1 minutes, to see the bigger areas where, of course, there's a lot more volumes to be traded in these areas. You know, the smaller the time frame, the lower the volumes. So you see those offers were correct, right? Those little offers we'd put up there actually turned out to be correct. They've caused the price to come back out again. No real surprise, is there? Why is there no real surprise? Because that's the NX price for the previous balance. If we're looking at the NX price for the previous balance, the balance you would probably imagine is the one you've just came up with in there. You can see that if you were looking at that original previous area, you had quite a strong idea that this might be the NX price area in the first place. So that tied in with some of these other candles that started to show up as possible offers in that price area. So there was a lot of people that were probably looking at that price area and saying, you know what, it's good, but it's not that good. No, I'm not going to be selling it, but I'm certainly not going to buy it either if the value hasn't extended more than what I would have imagined. And obviously that's just jammed the price. Now, I still quite like the idea of bidding down into this BX line here. Obviously that's not the current BX line, it's dropped down into this BX line here. So you can see I would still be quite keen to bid into this BX line. And if you can imagine the seller coming in here and the buyer coming in this pin here, and I said to you, where is your XX price? Well, your XX price in that first red candle is this price area here, correct? And all of a sudden, you're starting to see a confluence around about the 90 print. All of a sudden, you're starting to recognize that confluence around about 90 if the value was to stack up into that price area. Perfectly reasonable trade, right? Now, we don't know if it's going to be a trade because we're only coming up with some bids and offers based on the current value. The value might be different by the time the price gets there, in which case we'll pull away our bids. But even that act of pulling away the bids is information that we can actually use to take trades. Because if you're pulling away bids and you see the market maker pulling away bids, well, sell the damn thing. If you don't think the price is going to be a buy here, is it going to be a sell? Because ultimately there's a lot of weak buyers perhaps getting trapped somewhere in this area, allowing you to sell down into that area if you get a couple of failed auctions coming off the low price.